Today we're talking with Stuart Gelb and Ron Austin about non-qualified mortgages and the creative ways that they have achieved financing for their clients. Stuart, tell us a little bit about the Liquidity Source.
The Liquidity Source is a commercial finance advisory firm, and we deliver customized solutions to our clients. We start out by first finding out from the client what kind of financing needs they have. We also address and assess what kind of financial capabilities they have, and then we negotiate the right loan for that client.
What services do you specifically offer?
So we do everything from construction to permanent financing. We also do purchase and refinance, and at times we offer senior first mortgage money, which is also known as hard money loans, and preferred equity at times with certain clients.
So how do you differentiate from other brokers?
It's a great question, because in today's market, the market is, for the brokers, very commoditized, right? So there's really people that are going out, getting generic loans, generic terms, trying to get the best term and rate, which may help the client, but doesn't really address all the issues.
So tell us how you and Ron started working together.
So what happened was, actually this is like years already, right? Years ago, I was involved in some deals that I really couldn't get done. And then meeting Ron, who is great because here's a guy that had about 20 years of experience actually in the banking business, at the bank, and figured out ways and solutions to not the typical loans that people would go for, right? They may not even be qualified. They may not be able to get verification of income, and for all kinds of reasons, which Ron will explain. And we were able to get those done.
Ron, can you tell me a little bit about your business?
Absolutely. So my background is in executive level banking. I've been in the banking space for pretty much all my life. So being from a top-down view, looking at everything going into what it takes to close a loan, I kind of saw a lot of opportunity in what the banks were saying no to.
Yeah.
And that appealed to me because I said, look how much great business these banks are turning away because they stick to their guidelines and they don't have any way of figuring out how to, not to circumvent the guidelines because they're guidelines and they're there for a reason, but there has to be a different solution for a client that we know he's got great credit. We know he's got, money in the bank. We know he can pay the loan, but we just can't document it properly to meet the bank's requirement.
They're working off of like a checklist, basically.
Exactly. We don't listen to what the bank's guidelines necessarily say in the traditional sense. We have to listen to our client. And when our client tells us, here's what I'm doing, here's what I need, we try to figure out a solution for that client.
I know that with non-traditional lending, you're often faced with challenges that most brokers and banks cannot help their clients with. Ron, what are some of these challenges?
Well, sure. That's a great question. So before I get into the challenges, I'd just like to, by definition, define two types of loan products that are out there today. You have the conventional loan, which is fill every single box of the checklist that the bank provides you, which is typical, W-2s and the pay stubs and the tax returns and your profit and loss statements if you're self-employed, 2 months worth of bank statements, letters from CPAs and so on and so forth. And it's pretty much a standard list of items. And if you can't fulfill even one of those items on the checklist, your loan's going to be declined. So then there's the other loans, which we're talking about today, which are called non-qualified. Now the definition non-qualified means that the bank cannot sell your loan to either into a Fannie Mae, a Freddie Mac, or an FHA program. Therefore, they don't want to write that loan because they cannot unload it anywhere.
That makes sense.
The non-QM platform is a platform that's more portfolio. In other words, the bank that I'm speaking to about this loan is going to know everything about the client.
Since most brokers and banks aren't able to work with these challenges, can you give some insight on your process?
So if the client immediately tells me they have an income issue, or a credit issue, or an asset issue, or something that happened in the past, I automatically understand that we should switch the conversation and move into, let's talk about your option. So the first step to know if you're going to be eligible for a non-qualified loan would be the credit.
Ron, with over 25 years in this industry, you must have seen everything. Is there a deal that sticks out in your mind that you can share with us?
Let me just start right at the top. The gentleman was a doctor, successful surgeon. Everything was W-2 and pay stubs. Recently transitioned into a position of a partner in a firm. His income in effect changed from being a W-2 borrower to a K1/1099 borrower, deeming him self-employed. Successful, has a lot of money in the bank, but the bank said no. The reason? You don't have a 2-year work history as being self-employed. So he's basically stuck. Now, to make it even worse, the loan amount that we were talking about is called the jumbo loan. Jumbo loans have a very, very high threshold for credit. If you have any blips or scratches and dents on your credit report, chances are you're not getting a jumbo loan. So I was able to solve for a couple of things. First of all, by eliminating the need to document his income and basically just show what his history was to a non-traditional bank that thought outside the box, I was able to overcome that issue. And the fact that I was able to explain the recent credit issue to the bank and kind of work through that and say this is a very responsible person, we have an isolated incident, and that's what caused his credit to drop. We were able to get that doctor his loan, and he was able to buy that home.
You're the one who's really established these non-traditional banking relationships in order to help your clients, and you're working with Stuart on a lot of these deals. Can you guys tell me a little bit about what you're working on right now?
Why don't we talk about the cannabis deal?
Oh, absolutely. That's a great deal. Let's talk about a gentleman who has phenomenal credit, money. The asset was incredible. The piece of property was beautiful. There's nothing wrong with this person other than the fact that he's an executive vice president of a cannabis company. Now, because of that one reason, he's non-bankable. There's not a conventional lender in the United States that wants to touch his loan, merely because his employment is for a cannabis company. I couldn't even understand why banks would want to do this, but again, federal regulations, compliance, and all types of other silly issues sometimes get in the way of banks being able to do a perfect loan. And this was a perfect loan in every sense, with the exception of he was a person in the cannabis business.
So I do understand the issue with the cannabis space, but what is the reason why you went to Ron?
I would have to go have a bank that would accept a cannabis deal, and I'm not a residential agent. So I turned to Ron in this specific case where he spends 80% of his day and time in this space, which is for non-conforming traditional type loans, and he has the ability to get it done. When this happens, I want to pick up the phone and call Ron and get it done. That's what I want to do.
Solution-driven business.
Absolutely, on all sides.
Thank you so much for tuning in. If you'd like to schedule a free consultation with Stuart or Ron, please click the link at the end of this video.